When I first started investing, my plan was simple: buy good companies, collect the dividends, and hold them forever. I liked the idea of building something that would pay me for years without ever needing to sell. But over time, my strategy started to change a little. I started mixing in growth ETFs like SCHG and VU, partly for balance, partly because I didn't want to miss out on the gains I was seeing. And as my approach evolved, I ended up selling some of the first stocks I ever bought. So today, I wanted to look back at a few of those trades. Not to beat myself up, just out of curiosity. Did I make the right decisions? Or am I going to have some regrets? Welcome back to the Daily Dough. If you're new here, consider subscribing. Let's start with Key Corp, ticker symbol KEY. I bought 31.07038 shares at an average cost of $16.63 for a total investment of $516.89. I collected $56.22 in dividends, and when I sold the position at $17.23 per share, I received $532.56. So the total amount of money I received, including the sell and the dividends, came out to $588.78. After subtracting my original cost, my actual profit was $71.89. But what if we were to take a look at a hypothetical? Because as of recording this video, Key's share price is $18.38. So if I still held those shares today, the position would be worth $571.18. And the dividends I would have received while owning it up to today would be $82.80. That brings the hypothetical total to $653.98, which is $65.20 more than what I received. So Key is one of those positions where holding would have been slightly better, but not by much. Not much regret there. But Evercore is a different story. You see, I bought 4.93617 shares at an average cost of $83.85 for a total of $413.80. I collected $20.46 in dividends and sold in two parts, one at $126.20 and the rest at $195.06. So the total amount I received, including dividends, was $957.90. After subtracting my cost basis, my actual profit was $544.10. But as of recording this video, Evercore's share price is $317.30. So if I would have held those shares today, they would be worth $1,567.62. And the dividends I would have received while owning it today would be $50.35, which brings the hypothetical total to $1,617.97, around $660 more than what I actually received. Evercore aged extremely well. This is probably the closest thing to true regret on this list. But let's move on to what was my smallest position, CAT, which I had less than a single share. You see, I bought 0.93227 shares at an average cost of $165.16 for a total of $154.06 invested. I collected $6.67 in dividends, and then I sold in two small steps, one at $251.03 and the rest at $336.18 per share. The amount I received total, including dividends, was $315.97. My actual profit on CAT was $161.91. As of recording this video though, CAT's share price is a whopping $575.76. So if I still held that tiny position today, it would be worth $536.73, and the dividends I would have received up to today would be a measly $16.28. However, that brings the hypothetical total to $553.01, $237.04 more than what I actually received. CAT has done extremely well for themselves, and it's a stock that I always wish when I originally bought into it, I would have bought more shares. And finally, let's look at ticker symbol NLY. I bought 15.50764 shares at an average cost of $20.24 for a total of $313.95. Now, I collected $63.58 in dividends and sold everything for $18.85 per share, receiving $292.30. So the total amount I received, including dividends, was $355.88. After subtracting my cost basis, my actual profit was only $41.93. But as of recording this video, NLY's share price is $22.80. So if I still held the shares today, they would be worth $353.59. And the dividends I would have received up to today would be $126.65, which brings the hypothetical total to $480.24, $124.36 more than my real outcome. So NLY would have done better if I held, but not enough to make me question the decision. Looking back at old trades can be interesting, but it has its limits. You can always find a stock that would have done better if you had held it. That doesn't automatically mean the decision was wrong. The reality is, you don't get to know the future. You only get the information you had at that time. So your goals, your risk tolerance, your portfolio direction, and the opportunities you saw right then. And that's what most sell decisions come down to, just context. So instead of asking, would this have gone up more if I held it? The better questions are, did selling simplify my portfolio? Did it move me toward the way I actually want to invest? Did my money still grow even if my timing wasn't perfect? Because at the end of the day, you can't optimize every trade. You make the best decisions you can with the information you have. That's a much more realistic way to look at your investing. But I'm curious, what's one stock you sold that you sometimes think about and wonder what it would look like today if you kept it? Let me know in the comments.